Hi everyone, welcome to my YouTube channel. In today's video, I'm going to be talking about entry. I discovered that a lot of traders are struggling with entry, and no matter how perfect or how professional you are in this craft, if you don't know how to take entry, you're always going to be messing up your trades. All right, let's go to the video. First and foremost, I I am a liquidity trader. I love to trade when liquidity is taken out of the market. You can see these lines, you see these various lines, they are all liquidity zones where price where liquidity is sitting on. Take for example, you can see this line, we have a lot of sellers trying to come in into this line. You can see how many times the market was trying to reject this line. 1, 2, 3, 4, 5, 6, so many times. And these sellers that were hoping that the market is going to drop down, they were trying to get into the market uh, in the hope that the market was going to drop down. They actually hope that this market was going to drop down. But at the end of the day, the market stopped them all out. You can see how the market stopped them all out into the zone. That is why this place is known as liquidity zone, where sellers who were looking to get into the market were stopped out of the market. They actually think that they can ride this market straight down, but unfortunately the algorithm stopped them out by rallying up. First, that's how you mark out your liquidity zones. There are other ways to know that there's liquidity in the area that I'm going to teach later on in the next video. Now that you know the liquidity was taken up of the zone, you are going to be patient. You're going to be patient to wait and wait until price comes below the zone. Whenever price comes below the zone, that's when we take our trades. All right, be very clear on that. So the market rally up. You can see clearly that the market rally up. The market rally up, and this is gold. This is gold or gold USD. The market rally up, and you can see another liquidity was forming in the zone. We have the market rally up, rejection 1, 2, like 3 times. The market bounce on the zone, create a liquidity in this zone. Buyers are trying to get in, hoping that they can also take out this high. Whenever buyers come into the market, their plan is to make sure they try and take out the high. If they are not able to take out the high, it means the liquidity is created in their zone. Again, you see that liquidity was created here, and we also mark it out. That was perfect. Now you're learning how to mark a liquidity. That's number 1. And going further, like I said, when price comes below, today we took this trade. As soon as price comes below here, we already selling. But now, how do you sell? Whenever the market comes below, are you going to drop in or sell down? No, there are ways you can sell the market. Now, what do you do? I use a simple tool as a Fibonacci. What you do is that when you mark out your liquidity zones, you want to separate the liquidity zones into halves, meaning into 4 different halves. You can see this liquidity zone and this liquidity zone. I want to separate it into 2. Alright, I want to separate it into 2. This is very important. And I'm gonna make the lines of this color or something like this, and I want it to be dotted. Okay, you also want to further separate it again into another half. This thing I'm thinking you can get it in a way. I just want you to know that you can get it in a way. Again, you're gonna mark up that place, you lock it, and you're gonna divide this one into another zone. You have to divide each liquidity zones into four different segments, into 4 different zones. So what have we done here? We have divided the liquidity zones into 4 parts. 1, 2, 3, 4. So whenever price gets in here, like I said, we're hoping that price will go up so that we can take it to this place. But notice this is a key area that you can also sell to this point. If the market decides to consolidate in the zones, you can take it. All right, you can take it. Like here, if we want to take in the straight, we can do 5 minute chart. That's my favorite entry. Listen, whenever you divide your zone, you can always sell in the first zone. If the market comes to the second zone, it is assumed that you have missed that trade for that day. I repeat, you cannot sell in the second zone. You cannot sell in the second zone. Alright, so when market comes here, there's an opportunity to buy. You buy here, you sell here. When you divide this segment, again, when I divide this, if I want to sell, I sell in the first segment. When I'm going to buy, I buy in the first segment. Listen very carefully. Okay, here, market drop down into the zone. We all know that this is liquidity zone, that price is going to be very fast when it comes into the zone. And what we have to do is to divide the zone again into 4 different segments. Alright, we have to divide the zone into 4 different segments. We have to divide it into 4 different segments. This is one. Half of the other one, again, we have to divide it. 2. And the last one. And you have to lock so that they don't drift apart from the position you put them. So after you've done that, when you're looking to service market, now that it is coming to the serve area, you make sure that you get your entry from the zone. Like here, we didn't get a support. This is a support. We can take the entry from the zone, from the support. After the support got broken, we can take the entry as soon as the support gets broken and retested. Our stop is always 20 pips away from the origin, from the resistance line. So our stop is gonna be around the zone here, around here. And now our first take profit is gonna be at the sell side. This is the buy area. When it comes down to this place, we are already at the sell side, alright? So now, if we are looking to buy this market, we wait for price to come into the zone. Like I said, don't mistake what I'm saying. This first zone, after you are most of the resistance, the 2 key levels, you can buy here, you can sell here. On no account should you just buy in the zone. On no account should you buy in the zone. Sell here, buy here. Buy here, sell here. So when you go down, again, this is a key level. You have one key level here, this is not key level. When you have a division, you can sell here and you buy here. Okay, we took this trade. We took this trade today. We took this trade. Our stop was around the zone, and our first TP was around this area. This was where we took this trade, and our stop was around the zone. So this is exactly how you can take your own trade and you are going to maximize your potential. Let me go back and tell you exactly what I'm talking about. Like today, just today, we also have this trade. You can see this is today. This is clearly a buy area. Like here, we are looking to buy in the zone. We are looking to buy in the zone. So whenever you see something like a support level, like this is a support level, you can see that this is a support level. Here we have a support in this zone. When the price comes back and retested it 20 pips away from the high, and we got the straight as well. It's 20 pips here. We got the straight into the sell zone right here. This is your entry. This is stop 20 pips, and this is your take profit. And we are talking about whenever we trade in this area with this 95 pips. When price got into this area, this is a buy zone. We also look for resistance to be broken before we get into the trade. And you can see how the market came back and tapped into our sell area. Now we are here. No trade is to be taken in the zone. No trade, you just wait for price to come into the zone and you look for when price will give you an entry to go long. I'm looking at a price coming to the zone. I want to see resistance broken here, so we can take a long in this area. We can take a long in this area into the zone. We can take a long in this area, something like this. But first, you need to see that the resistance is formed and it's broken, and you can get in, and you hope to take. So basically, whenever you're trading, you should always understand that you have your zones that you're trading. All right, you have your zones that you're trading. Like here, yeah, sometimes you take your losses. Here, when price came in, we here, we took this trade, we got 98, 96 pips from here. So when price came back into this area, this is a resistance area, I still want to get in here. I wanted to get into this area because this place clearly showed me that this is a support area. So I got into this trade. When price came and reacted into this, I got into this trade. Sorry, I got into this trade. I got into this trade from here. Since I have this rejection, and my stop was just 20 pips below. I was hoping that the market is going to come back into this high, and guess what the market do? The market stopped us out. Okay, fine, let's go. We only lost 40 pips, and what we gained already, we gained 90 pips. So you can never run at loss when you trade this strategy. But first, you need to know how to mark out support and resistance. You need to know how to mark your liquidity zone. That I'm gonna make a video on it. But if you already have a way to mark out your liquidity zones, like I said in my video, you can see when you go back, you see how the market was reacting into the zones. We know that there's liquidity in these zones. Look at that. Look at this area. Look at this area. 1, 2, 3, 4, 5. When the market comes up of this area, you're gonna do the same thing. Just mark it out. The first segment is gonna be your buy area. Here, don't worry if you get stopped. That's cool. You have to buy here. You have to, because here we have liquidity in the zone. Market is going to come and attack this naked. Sorry, market's going to come and attack this little bro here. And so when price come above here, I tell you this how I trade, and I'm making a whole lot. Here you're gonna divide it again into 4 segments. Like I said, that's how we trade. It doesn't matter if you lose, but you know that in the long run you are always winning because you know exactly what you're doing. This is how we trade it. You go around, mark out the zone. Again, you go up here, mark out the zone. Go up here, mark out the zone. Alright. Done marking it out, and then you wait. The price coming to this area, give your level of resistance and break it. Boom, you have a trade. You go long in this area. You set your stop below it, depending on where the market gives you resistance. But you make sure that the market gives you resistance in this first zone. This zone, you make sure the market gives you resistance in this first zone. This is the first zone. The market must give you resistance in the zone. And when the resistance got broken, that's when you get into the trade. Then you're gonna aim not the highest high, you're gonna aim here. And this is high water. You're talking about here, you're talking about this is 181 pips, guys. 181 pips. So we go there. Now the market is at a region where we cannot trade it. Like I said, you have to wait for price to come into the zone. Where price get into the zone and give you a level of resistance, and then you get in. Thank you for watching my video. Like and subscribe. Don't forget to share the video. Like, subscribe. I'm going to always give you fantastic content. I have a way you can mark out the yearly candle, the 12-month candle, and take your entry for a whole year, and you watch prices going in your direction. I was born to do this, and I hope that you catch up with my teachings. If there's anything you don't understand, put your comment down there below. Tell me whatever video you want me to make. Just let me know, and I'll do it right there for you. Thank you for watching. Subscribe and turn on the notification button. Thank you.